Hello. In this video, I'm going to talk about the latest update to the Jackrabbit modulus framework, the Bollinger Bands module. I'm in TradingView and I've got BTC loaded with the chart up here. Right now I've got Bollinger Bands hidden because I need to cover a few things before I reveal this new indicator. First and foremost, this is a complete reconceptualization of what Bollinger Bands is. Jackrabbit already has two iterations of Bollinger Bands, one built into J-Arling and the Fibonacci version. Moving Bollinger Bands to the modulus framework meant that I needed to step up my game. It couldn't be just a rehash of what I have already made, but I had to push the concept of what a Bollinger Band is to the limits, into a new direction and an innovative direction that fits appropriately within Jackrabbit. The modulus framework has some very specific goals towards it. One of those goals is to make sure that anything that goes into it as a module is a standalone and self-sufficient indicator. So even when looking at a classic like Bollinger Bands, the end project or the end product cannot be a classic reproduction. It has to be maxed out to the very limits of the abilities of what Bollinger's concept was. So now we're going to unveil Bollinger's band for the modulus framework. It is very different in a lot of respects. Let's start with by zooming in. And I'm going to pick a particular point on this chart to demonstrate some features. This is just a standard simple Bollinger. Classic example, pretty easy to see straight out. The black line is your price action. It mirrors it perfectly. This is your lower boundary. This is your upper boundary. This is your median. This is your classic example of Bollinger. You buy down here normally. You sell when the price goes above the upper boundary normally. Here is the first change that takes place for the Jackrabbit framework versus the traditional context. This is an important distinction because it has a huge impact on entry and exit points within the Bollinger Band algorithm. As I said, normally all of this up here would be a sell. So as soon as the price action crosses above the upper boundary, all of these would be sell points. The reconceptualization of this changes the dynamics. Sell points now only occur when a price action crosses below the upper boundary. So instead of starting here at a low point for the price, using this approach, the sell point would now be up here. So as a means of trying to increase profit, this tries to maximize that effect as much as possible. The same holds true for the buy points. Normally a buy point would start right here and would continue all the way down to the best possible buy point right here. By using a bipoint crossover with the lower median, we eliminate all of the unwanted signals, the high point all the way down, and we pick it only once it's going back into the neutral boundary range. So we get one bipoint here that maximizes the effect of our entry. So by maximizing the effect of our entry and maximizing the effect of our exit, we enter here, we exit here, we have a significant increase in profit. There are some downsides to this approach though, and let's see if I can find one to demonstrate it. Yes. Downsides include some very unusual market conditions that, because of the way the actual price action is measured, it looks appropriate here that it should buy. All his price action came down under and boom, crosses over right here. But the actual mathematics, the algorithm itself, does not show this as a good entry point. It shows it as a bad entry point because the price action does not match appropriately the direction that it needs to match to ensure a good, solid entry point. So you will see situations like this under this algorithm. This is supposed to happen. The price action out here has to go upwards for a purchase to take place. If the price action goes downwards, meaning the closing price is below the opening price, a buy signal will not take place. So understand when you're working with this different approach, this is normal. And you will find it quite a bit and quite often. But here you see this particular buy point, it does match the alignment properly. So the signal was generated. Let's move back to the end of the chain. You will see things like this quite often, and you will see situations here. This is a legitimate framework. It doesn't look like it. But when you move in closely, you see that as much as this is an annoyance, the Bollinger shows the crossing point. So let's really zoom in here. Right here, it's going down as it's supposed to. It crosses the upper boundary as it's supposed to. It marks it for a sale. This is not necessarily an ideal position, and this can be adjusted through your boundaries. But this is nonetheless a legitimate selling point. So from the market standpoint, the algorithm is working properly. Of course, it would have been nicer to catch the first sell point up here and catch this profit. But nonetheless, it did catch a buy point down here. Now that we've covered some of the basics, I'm going to zoom this back in. I want to get real close because this Bollinger is not done with its surprises. As I said, the blue line is the median. But this Bollinger separates or supports an upper median and a lower median. So let's go into the settings and demonstrate that. This is a very interesting Bollinger. Upper median source, high. Lower median source, low. And now we see upper and lower medians appropriately. Same rules apply, but the importance is if you use open and close as your medians, this algorithm understands polarity, and it will not let the lower boundary ever cross over the upper boundary or vice versa. The boundary polarity will always be maintained. Here we have a situation where it looks like it should have purchased red, green, but again it didn't because of the polarity and the direction. So as you look at your charts, understand these polarities. They do have a huge impact. Here is a good signal down here. Here is the sell signal right here. And this is going to be a very nice little profit. So while this is completely unconventional in the direction it goes, you will see that it does do an exceptional job. We're still not done with the surprises though. There are even more surprises. This Bollinger has a lot of them. So when you first begin working with it, realize your upper boundary right here can have a smoothing effect. Your upper median has its own moving average. So you can actually take your upper median, normally it's none if you want the raw data exactly as it's given by the algorithm, and you can process it. And filter it based upon a moving average. Notice this signal disappeared, but this signal showed up. So through using moving averages for the upper and lower boundaries, you are able to begin to tune extensively each particular algorithm. And those algorithms take on a new level of flexibility, simply not found in a traditional Bollinger. Now, for now, I'm going to set these back to the defaults. Because we're still not done with the surprises. The surprises just keep on coming with this one. So now let's go to confirmation bias. And here we go with confirmation bias. And now I'm going to put this to triple. I'm going to put this to triple. I'm going to put these to EMA. Yes, you can get this complex with this Bollinger. You can also independently change how this Bollinger works. So, as you begin to explore what is possible, you can confirm a different asset. You can confirm a different time frame. All of the features expected within the modulus framework exist within this indicator. Every single one of them. So now, we have the buy marker way down here. No sell markers yet. Let's come back here. And let's see when the last sell marker was. Okay, nope, only buy markers. So this can be a very long-term situation. Let's move up to the 15-minute chart. So your confirmations can take on a whole new level. 15-minute chart shows a couple of cell markers. And a buy marker. Now, they're not necessarily ideal positions, but nonetheless, it does demonstrate the abilities. And finally, if you want to see these Bollingers down here better, like what I showed in the screenshot, you just uncheck the upper Bollinger. And it will let you zoom in to the lower Bollinger. And now you can see here the lower Bollinger appropriate to the confirmation. Notice that it is below 0. So the confirmation Bollinger shows up inverted, whereas the main one shows up above 0. So let's turn this back on. So as you progress with the new Bollinger framework, as you can see, it has a lot of unique features. It can do a lot of things that simply don't exist in the original Bollinger algorithm. Sell point way up here, buy point way down here, sell point over here. And it even works with the smaller time frames. So you have the potential of a double Bollinger. You have the potential of a crossover confirmation, or even pulling your Bollinger from different time frames. So we're at the 1 second level. Let's do a very simple confirmation. Put these both at close. Let's use this at an SMA. Let's use this at an SMA. And let's just do a raw. So nice and simple. Now, we are on the 1 second. Well, let's adjust our boundary to be a little bit more lenient. A 1% deviation for the upper boundary and for the lower boundary. Give it a chance to do a better job. Now let's come up here. Time frame. Let's do a time frame of 2 minutes. Oops, and I forgot to turn on the confirmation. So now it will reevaluate the chart appropriate to 1 second and a confirmation of 2 minutes. And there we are. As you can see, no signals obviously, no markers. But nonetheless, you can see just how easy this is. Let's go back up to the 1 minute and see if it changes anything. No changes, except we got a sell signal here. So be sure when you plan out your Bollingers to take into account this Bollinger doesn't play by the rules that you're used to. This Bollinger takes it to the next step and pushes the limits of thinking. Each of these boundaries, your upper boundary, your lower boundary, your upper median, and your lower median, can all have independent and individual moving averages. All 27 moving averages can be applied appropriate to whatever you are working with. So let's come down here and let's just pick something insane. And you can use different ones appropriately that will have an impact on your buying and selling. So let's have something really crazy. Yes, it can go this extreme. So you begin to see just how much you can actually make this completely differentiate from anything you're used to. You can even go through, for example, the upper boundary. None. No filtering at all. Let's take the upper median and go to no filtering. And let's put the upper boundary to a simple EMA. So now your upper median isn't filtered. You can begin to see just how easily you can make this really go into a whole new level. Okay. Let's just go with the flat SMA. We'll smooth this out. Lower boundary, we'll smooth this out. That pushes our buy signals down more. You can see the impact already. Let's take this to none. So now our lower boundary is a smooth moving average. Our upper boundary has no filtering whatsoever. We're not done yet though. Lower boundary, median look back. We're at the 1 minute mark. Let's take a median look back of, let's see, 1 minute, 60, 120, 180, 3 hours. And let's take the smoothing to a 24 hours. So 3 hours for the lower median, and this will apply a 24-hour smoothing. Now we will zoom out. And now you see a big difference in terms of how things really look. So by actually working with this and tuning it carefully, you now have a potential for possibilities that simply did not exist previously. And remember to always check your price action, because just because it shows up at the long shots or zoomed out As you can see, neither one of these crossed the lower boundary. So let's take this to something unconventional. Let's take our lower median to just let it wait, and you can actually watch the updates take place. Let's take our lower median up to 1440. As you can see, the correlation between the lower median and the lower boundary. The lower boundary doesn't have much of an impact visually by itself, but when you combine with the lower median, and in fact the lower median is an overriding impact in most cases. So there we go. We can also just take and go straight to raw data. As you can see, catching a buy signal here is going to require a pretty significant drop. So you can really tune this Bollinger to look for excesses in the market. And those excesses can really have a dramatic impact in your trading. For example, down here, let's see if we can push this out. Look at the volatility right here. Quite a bit. So Bollinger can be used as an entry point. It can also be used as a way of keeping you out a bad market. So as you progress and you work with this rendition of Bollinger, be sure to test all of the features, because you have a lot of them now. And those features can really change the dynamic of what you're looking for. This Bollinger is capable of a lot more than just about any other Bollinger on the market, including being able to use it as a dynamic stop loss. For example, right here, the way this is set up, if you're looking for good stop loss exit points, you can actually use your lower boundary as a selling boundary. So if the price action does drop below this lower boundary, you can cut your ties and get out quickly. And notice it fluctuates graphically based upon just how much volatility the market has. And here would have been a close call. Of course, you can use this as a way out. You can use another Bollinger on top of it as a way in, or any of Jackrabbit's various signals. So as you work with it, always test different possibilities. Always look for different ways. Don't just think of one single direction. Think of how you want your strategy to interconnect, both with your upper boundary and with your lower boundary. Here we have a very volatile upper boundary that hugs the market closely. Here we have a very flat lower boundary that doesn't hug the market. So this almost behaves as an organic momentum. where the market has to drop significantly before it actually makes a purchase. Here is an example of just how carefully tuning these could work out quite nicely. Here we have a sell point right before drop-off, and then down here we buy it all back with a nice little sell point here. So there are a definite dozen different ways to look at this and explore your options. Be sure to test everything in a paper trader. And as always, remember that this will show up with the signal line first. So you will see the standard normal process for Jackrabbit when you first start this indicator. Until next time.